Good morning, guys. Let's talk about the moves last night. Global macro. I'll come back and do a crypto video. I know some of you were wanting an update on the cycles. I haven't done one in a while. So everyone's talking about Apple this morning. That's probably going to be the majority of the storytelling, and rightfully so. But listen, this is what we've been talking about. When growth slows, you're going to see the tech. You're going to see the high beta stuff. If you get the global macro picture right, then you're going to get Apple and some of these other names right. So, we were short some calls. We've been pretty aggressively shorting calls on any of these intermediate term bounces. But I want to just talk about the overall global macro landscape for S&Ps and bonds. So we still like being long treasuries. Yesterday was a pretty tough squeeze, actually. And the things that are most important when we look at the daily here and S&P. So we talked about our cycle was low coming into 2 weeks ago. We were covering Christmas, the Monday before Christmas Eve, whatever that was, right in line here with the 8 count, bottom of this last cycle. So we dropped 8 days. Boom, you had angle and distance away from the 8. That was an easy short covering opportunity. You don't have to overcomplicate that. Now we've had the daily cycle come back up. So we were actually yesterday, we were 4 days in. Today is obviously 5. But the thing with yesterday is we started, my traders know, we broke the swing line lows in the morning. And when you start to make a lower low, you can see it on the hourly. It's usually difficult to come all the way back up and make a new high. So if you'll notice, let me draw this real quickly. You're following the higher lows on this intermediate term move. And this was yesterday right here, we came in and we already made lower lows. So when you fall from here to a new low, relative to this low, it's very difficult in the next ebb and flow or the next move to go all the way back to a new high. It's really difficult to go all the way back and do 100% retrace. So we were actually shorting here, and then I got long some Dow futures and tried to stay with the position and ended up covering a little bit late in the day after the actual cash close. But the point is that this has a higher probability of starting to make a lower high at about the 50% retrace. And so the fact that we rally all the way back to that major pivot, I thought was actually pretty tough squeeze to trade. But still, we did not make the higher high. So that's what I mean. You follow a new low. It's just difficult to go all the way to a new high. And then here we are today. So the low from yesterday matters on the downside. This is the main pivot up here. There's a lot of risk to another short squeeze, and this is where the risk is for the bears like us if we get above this high. And we'll see if that happens. I don't know. It seems like there's a lot of risk, just a lot of anxiety in the market now. We'll see if this kind of exacerbates itself on the Apple news. And the reason I say it, look at what happened to the yen last night. And I know there's going to be a lot of stories going around about what caused it. You always have somebody talking about a fat finger. But it's a lack of liquidity, it's levels. And we actually talked yesterday. We were short Aussie and long the yen yesterday. We started a core position. And then into last night, we had a really, really profitable evening. And so not only do you have holidays, lack of liquidity as far as, I think it's Japanese banking holiday, but you've got just a high level of poor performance. You've had a lot of anxiety in the market. The VIX is at high levels. So it's all this risk off that we've been talking about since August and September, and this bull market volatility. You're going to get the big moves in treasuries. You're going to get the big moves in the yen. You're going to get the big moves even in gold. You started to trade a lot better. And obviously on the short side or the long side of the VIX, short side of S&P's, long side of the VIX. So, but this mattered, taking out this low. We actually talked about, we thought we could retest 73. Just didn't think it would happen in one night. And I haven't seen a big move like that since maybe the Euro Swissy peg. I think it was 8%. The yen moved. So crazy, but if you just look across the board, the yen has been breaking out. It started to break out for a while. This isn't new to us. We've been bullish on the yen. We've even talked about on the monthly level that the dollar yen, if it starts to break this wedge, there's no doubt that there's a lot of algos and machines. We're picking up on these trend lines. And if this starts to roll over here, you could see a big global macro move on the yen. You could see it in pound yen started to roll over. We were in a wedge. And then this is the second month down. We clearly started making lower lows below 140. It's going to do euro yen also. So here, taking out this low. We probably should revisit that 72 area and the lows from last night. But this is all trending lower now. Euro yen, same thing. It was in a nice tight wedge here, and that's broken. So there's a bull market in the yen, and that just is another indicator, global macro, of what we've been talking about. This is a lot of risk off. There's a lot of risk in the market. As far as equities, we want to stay long dollars. We want to stay long treasuries. We want to keep adding and reducing, but stick with the playbook. All right, I'm going to come back and do crypto.